Hello, thank you for viewing our analyst report for Spark Energy Incorporated for Bergen Road Reports. My name is Samantha Becker, and my fellow analysts are Jordan Boritz, Benjamin Ginsberg, and Drew Hockhauser. This video will present our initiating coverage on Spark Energy. Here is our agenda for today. We will be starting with a company overview, going through the corporate strategy, following with the valuation. Next, I will discuss our investment thesis and recommendations, ending with our site visit. Company overview. Spark Energy trades on the NASDAQ under the ticker SPKE and is a competitive utility provider of commercial and residential energy. Spark operates in the deregulated utilities market, in which utility companies are solely responsible for operations, maintenance, and distribution of third-party generated energy to the consumer. Load-serving entities like Spark purchase already generated energy and sell the energy, distributing it through pre-existing channels. Spark's business is comprised of two primary operating segments, Spark Energy Gas LLC and Spark Energy LLC, which is the electricity segment. The company is located in Houston, Texas. Spark Energy is a small-cap company with a market capitalization of $244.87 million. As of close on November 17, 2015, its stock price last traded at $17.68. Spark's 52-week high price was $18.33 and low was $11.85. Market served. Spark Energy, although headquartered in Houston, Texas, serves customers in 16 states and 46 service territories. The company, limited by regulation and expansion costs, may only provide electricity or natural gas to its customers instead of both in each individual state. Spark Energy purchases energy wholesale and distributes it to customers through an existing infrastructure. The company purchases its natural gas mainly through market counterparts. Spark contracts with independent system operators, ISOs, and market counterparts to purchase its bulk electricity. ISOs are entities approved by the Federal Energy Regulatory Commission, FERC, that provide non-discriminatory utilities transmission. There are currently 7 ISOs in the U.S. serving the Northeast, Midwest, and California regions. Structure. Spark Energy utilizes a multi-layer organizational structure to deliver economic and operational benefits to its founder, Keith Maxwell III, the company itself, and the company's public shareholders. Shares of Spark are split into 2 classes, A and B. Class A shares are publicly traded. If you take a look at point A on the organizational structure chart, these Class A shares have a cumulative 21.82% voting interest and 100% economic interest in Spark. Shown in orange on the chart, Class B shares are privately held by Mr. Maxwell through his NewDevco entities, a formative tax shield. Labeled point B, these Class B shares are entitled to 78.18% voting power and 0% economic interest in Spark. Business operations are conducted in the Spark Holdco, LLC entity. Class A shareholders, through their ownership in Spark Energy Incorporated, hold a 21.82% economic interest in Spark Holdco. Point C illustrates Spark management maintaining full operational control of Spark Holdco. Point D demonstrates Mr. Maxwell, through his ownership of NewDevco Retail Holdings, is entitled to 78.18% economic interest in Spark Holdco, LLC. Spark Holdco, LLC houses all of the company's operations. Spark Energy Incorporated is the sole managing member of Spark Holdco, LLC. It carries full operational control and 21.82% of the economic interest in the company. Keith Maxwell, Spark's founder, owns 10.75 million Class B units of Spark Holdco, LLC, via his holding company, NewDevco Retail Holdings, LLC, which entitles him to 78.18% of the economic interest in the company. Mr. Maxwell holds all issued Class B shares, which are each convertible to 1 Class A share at any point in time. Total shares outstanding are 13.85 million. Corporate strategy. Spark Energy reaps special benefits from its complex corporate structure and involved founder. Founder Mr. Maxwell is able to use New DevCo and his personal wealth to acquire companies for Spark Energy. New DevCo will hold these acquired companies for Spark. Spark's management may acquire the company piece by piece or as a whole when management sees appropriate. This flexibility effectively delivers management a prolonged due diligence period and an opportunity to integrate the acquired assets or companies at an appropriate rate. Mr. Maxwell's increased involvement also allows Spark to borrow money at a lower rate than average for peer companies. Spark Energy's growth strategy is rooted in organic growth through marketing, new market entry, and diversification. Management stressed the importance of door-to-door marketing in existing markets to step up Spark's customer growth. Organic growth opportunities also exist in new markets in which Spark can enter to establish a customer base. Spark's management also mentioned that slight diversification of product offers may allow for both customer and margin growth. Valuation. After researching and testing different valuation methods for utility company valuations, we decided to use a combination of dividend discount model and price to cash flow model. Our team focused on the dividend discount model and price to cash flow model because of management's commitment to paying out stable dividends as it increases its cash flows. We weighted the two methods equally to arrive at Spark Energy's 12-month target price of $21. Our first step involved forecasting the company's financial statements using sensitivity analysis and testing different scenarios with the discounted cash flows valuation method. This step provided us with insight into the drivers of Spark's cash flows, expenses, and profits. We forecasted next year's annual dividend to be $1.45 per share. Management was adamant that Spark is committed to maintaining a $1.45 annual dividend. Our team assumed an after-tax weighted average cost of capital rate of 11% and terminal dividend growth rate of 4%. Using these different rates, our team arrived at a 12-month target price of $20.71 per share. We calculate Spark's price to cash flow per share by dividing Spark's November 3rd, 2015 share price of $17.31 by forecasted expected forward earnings of $3.39. The quotient was then multiplied by Spark's annually operating cash flow per share of $4.09. The price to cash flow method values Spark's 12-month target price at $20.88 per share. Investment thesis and recommendation. Regulatory changes. The deregulated markets where Spark competes are inherently susceptible to regulatory change. Market participants act similar to investors exposing and purchasing arbitrage opportunities. Retail utility providers rush to opportunities in the market that allow for increased margins by raising consumer prices or lowering costs. A number of factors limit Spark's direct risks associated with regulation. The prolonged legal process grants the market the privilege of foresight. Spark and its peers are able to anticipate and plan for changes long before regulators enact change. Similarly, any legislation passed affects all market participants. Spark's small organizational depth allows it to react quickly to approved legislation. If regulation negatively affects Spark's cost structure, Spark will pass these costs to the customer. Necessity good. Spark Energy is a provider of necessity goods, goods that people must have to sustain basic living conditions. Therefore, customers will not drop Spark as a power provider in a volatile economy unless Spark cannot offer competitive prices. Customers may look to consume less power through conservatory steps. However, electricity and natural gas usage decreases are generally minimal. As almost all utility providers do, when electricity and natural gas costs increase, Spark passes the increases to its variable rate customers. Spark hedges the energy prices of its fixed rate contracts so that it does not need to absorb the cost volatility of the energy consumed by those fixed rate customers. Thus, Spark will likely outperform the market in rocky economic times as it offers a necessity product and is able to manage increased costs. Competitive advantage in acquisitions. Spark has a distinct competitive advantage in acquisition opportunities that arises out of the company's unique structure. Keith Maxwell, the founder of Spark, holds a majority of Spark's voting rights and is the sole owner of Nudevco Retail Holdings, LLC. Mr. Maxwell is able to use Nudevco and his personal wealth to acquire companies for Spark Energy. Nudevco will hold these acquired companies for Spark. Spark's management may acquire the company piece by piece or as a whole when management sees appropriate. This flexibility effectively delivers management a prolonged due diligence period and an opportunity to integrate the acquired assets or companies at an appropriate rate. Recommendation: compiling all of our research and valuation, our analyst team gives Spark Energy a market outperform rating and projects Spark's stock price will increase to a 12-month target price of $21. Its forecasted stock return is 18.78%. Site visit. Our analyst team visited Spark's headquarters in Houston, Texas, to discuss the company's direction with management. The company's management expressed confidence in the company's operations and future growth. Management also highlighted the importance of the company's corporate structure, highlighting the financing and acquisition benefits its founders' involvement provides. Again, thank you for taking the time to watch our video summary of our Birkenroad report covering Spark Energy. Visit www.birkenroad.org to read the full report. Disclaimer: the Birkenroad reports produced solely as a part of an educational program at Tulane University's A.B. Freeman School of Business. The reports are not investment advice, and you should not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding any potential investment.